Here are the crypto top headlines covered in this video. Coinbase continues to fight for access to Gensler's private emails. Also, why Bitcoin could stay low until October, what analysts are saying. Plus, crypto industry is about to boom, is outperforming the internet, says Architect Partners. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: Coinbase continues to fight for access to Gensler's private emails. In a recent letter to a district court judge, Coinbase argued that the SEC chair's private communications are an appropriate source of discovery, crucial to mounting a reasonable defense. United States crypto exchange Coinbase has continued to seek access to Gary Gensler's personal communications, arguing they're an appropriate source of discovery in its ongoing battle with the financial regulator. Coinbase first requested Gensler produce personal communications in April, arguing it was relevant to its case. This includes any documents concerning crypto beginning from 2017. The Securities and Exchange Commission sought to block Coinbase's request in a June 28th letter to District Court Judge Catherine Fela, saying it rejected this position and proposal. Coinbase has now challenged this in a letter filed on July 3rd, arguing Gensler's personal communications regarding the regulatory status of digital assets and crypto exchanges during his role as SEC chair is at the heart of Coinbase's fair notice defense. Mr. Gensler has purported to share his views and communicate with market participants, at times expressly in his personal capacity, wrote Coinbase, adding that this was all the more reason to probe his private messages. The SEC does not and cannot argue that during his tenure as chair, Mr. Gensler never communicated about these matters with market participants by personal email. Instead, they simply refuse to ask. Additionally, the lawyers said Gensler's communications, both during his time as SEC chair and before his tenure, were of equal importance, as it would help them better understand his thinking on regulatory matters over time. In a July 3rd post on X, Coinbase's legal chief added their efforts for reasonable discovery were made in response to a legal battle the SEC started in the first place. We have responded to the SEC's effort to block reasonable discovery from Mr. Gensler in a case that it, not Coinbase, chose to file, wrote Coinbase Chief Legal Officer Paul Grewal. The SEC sued Coinbase in June 2023, accusing the crypto exchange of violating federal securities laws by listing 13 tokens it says are securities, and that Coinbase has operated as an unregistered securities broker since 2019, nearly 2 years before its initial public offering in April 2021. Coinbase argues the tokens listed on its exchange shouldn't be considered securities, claiming they fall outside of SEC regulations. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: why Bitcoin could stay low until October, what analysts are saying. The crypto market is on edge as Bitcoin hovers around $57,000, showing several bearish signals that could spell even more trouble ahead. With its daily 200-day moving average breached and RSI plummeting, many are questioning whether digital gold can withstand the upcoming storm. Adding fuel to the fire, the long-anticipated Mt. Gox repayments are set to begin in July, potentially releasing $8.5 billion worth of Bitcoin into an already volatile market, will Bitcoin find its footing or tumble to new lows? Let's dive into the data and see. Bitcoin currently shows bearish signals, having crossed below its daily 200-day moving average, or MA, the Daily Relative Strength Index, or RSI, at 29.79 also moved below its moving average. The scenario presents a lucrative time to invest, especially considering the historical performance of Bitcoin rebounding from such lows. Despite this, the current market conditions suggest a potential for further decline. Notably, Bitcoin has crossed below its 200-day MA multiple times in recent history. The last instance was in June 2022, where it stayed below until March 2023, setting a low in November and then starting to move upward. Another instance occurred in August 2023, remaining below until October 2023. These patterns suggest that Bitcoin tends to stay below the 200-day MA during summer and autumn. While not a definitive indicator, this historical context can help create a strategic plan supported by other data points. In July, Mt. Gox will start distributing around $8.5 billion worth of Bitcoin to creditors. Although CoinShares suggests this may not have a significant impact on Bitcoin's price, the market may already be feeling some effects. In an aggressive scenario, a potential drop of 19.2% seems plausible. This aligns with our in-house analysis, indicating that Bitcoin's price could drop to a support range between $50,856 and $51,985. This area is a confluence of multiple Fibonacci retracements and represents a macro golden pocket, indicating strong potential support. On a weekly time frame, the 50-day moving average also aligns with that area. Another aspect to consider is that there are no potential support levels until this golden pocket, reinforcing the likelihood that Bitcoin could indeed drop to these levels. However, more data supports this outlook. For instance, Glassnode's sell-side risk ratio provides additional insights into potential volatility. This metric measures realized profit and loss relative to the asset size, indicating market equilibrium or the need for re-equilibrium. High values suggest significant profits or losses, often followed by high volatility, while low values suggest market stability. Currently, the sell-side risk ratio is at historic lows, indicating an equilibrium and hinting at potential volatility ahead. Volatility expectations are also heightened. The model assessing the 30-day change in realized volatility across various timeframes shows a marked decline, suggesting compression and future heightened volatility. Moreover, the URPD metric highlights supply concentrations around specific cost basis clusters. The current spot price is near the lower bound of a significant supply node between $60,000 and the all-time high, where 2.63 million BTC, or 13.4% of the circulating supply, is located. This concentration indicates that many investors may be sensitive to price drops below $60,000. Additionally, Bitcoin has fallen below the on-chain trader realized price, reinforcing the bearish outlook. Despite significant interest in Bitcoin from big players in the financial industry, including Michael Saylor, and strong demand to invest in Bitcoin at these prices, recent data from CoinGlass shows that Bitcoin ETF inflows have been declining and outflows have started. This shift indicates that despite the demand, there is an increasing bearish sentiment in the market, even from institutional investors. Considering all the factors, it is possible that Bitcoin will remain at lower levels for some time, potentially until September or October. Given this outlook, the strategy involves two scenarios. If one finds these prices appealing, the first approach is to dollar cost average into Bitcoin now and continue to do so if it drops further. Alternatively, one could wait for a potential drop to the $50,000 to $52,000 range to enter a long position. Historically, investing in Bitcoin while it is below the 200-day MA has proven to be a strong long-term decision. Our next top headline, crypto industry is about to boom, is outperforming the internet, says Architect Partners. The digital asset industry added more than $750 billion in value in the first half of the year, the report said. The digital asset industry is beginning a major growth phase and is in a far better place than it was 2 years ago, investment bank Architect Partners said in a quarterly report published last week. The value of the crypto industry climbed more than $750 billion in the first half, the company said. Growth was driven by a surge in the value of crypto tokens, equating to more than $700 billion, the successful launch of spot Bitcoin exchange-traded funds in the U.S., which drew in more than $15 billion, and the appreciation of publicly listed crypto companies, which added a further $11 billion. Crypto and the Internet, both of which are disruptive technologies, have very similar characteristics, the report said, noting that the cryptocurrency market is recovering from the so-called crypto winter much faster than the Internet recovered after the dot-com bubble burst in 2000. Ironically, crypto has been the stepchild of the Internet, but is now outperforming its predecessor and exceeds the Internet's value at the same portion of their respective life cycles, Architect said. Deal activity is also on the rise, with the announced transaction value in the second quarter hitting a record high of $2.7 billion, exceeding the combined value of the previous 8 quarters, the report noted. Architect said confidence and momentum in markets are back, with the crypto winter in the past, and professionalism, risk management, ethical behavior, and doing it right are finally becoming the foundational principles of crypto. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.